Good morning, ladies and gentlemen. I've lived in Singapore now for 3 years, and I have a role at Rothschild that requires me to be intimately aware of what's happening in Asia and to keep up to date with investor appetites all around the world. Malaysia is a market which I'm fortunate to know well. I think one of the very first offshore deals I did after I joined Rothschild 20 years ago was here in Malaysia. I've travelled here many times since, and since I've been in Singapore for the last 3 years, I'm a frequent visitor to Malaysia. It's therefore a great privilege for me to be invited to this forum and to be given the opportunity to give you my perspective on the opportunities and challenges facing the ASEAN nations today. During my lifetime in London and here in Singapore, I managed our global utilities business, advising corporates and governments on mergers and acquisitions, restructurings, debt raising, and privatisation, most often in the power and utility sector. With this background, I see the members of ASEAN as being currently today in a unique position. If the nations can work together to capitalise on the opportunities and to overcome the challenges, they will build further on the progress that has pushed this region into the forefront of the global investment community's attention. What I want to do then in my short talk is firstly to start off by setting out where ASEAN is relative to other regions in the context of a few statistics. I will then give you my perspective on why this is a perfect opportunity for ASEAN and on exactly what this opportunity is. And I'll then share with you some of the challenges. Firstly then, just look at some of the statistics. This first slide sets out GDP growth rates across the ASEAN region. I think there's three very obvious things that jump out from this. As far as the growth league goes, China and India, and more generally the BRICS, including Brazil and Russia, are at the top of the growth league. The relegation spots are occupied by Europe and North America, and then the ASEAN countries are very much in the middle. Looking at population, pretty steady picture across the world. The only thing that really jumps out there is the slow growth of population in what this slide calls the Far East, which means Japan and Korea, and the ageing problems that we know Japan is now facing. Taking these two things together then, we look at the performance of GDP per head, and once again we've got the same position. China and India at the top, Europe and America at the bottom, ASEAN in the middle. And then finally, I think an interesting statistic here is what's been happening to foreign direct investment, FDI. What I think jumps out here is that there has been a slowdown across the region. If you look at the compound growth rates, over 20 years, investment in ASEAN has grown at 6% a year, but there's been a fall-off in the last 5 years in ASEAN and in a lot of other countries as well. Again, the place that really jumps out for the growth in investment is the BRICS, and particularly I think India most spectacularly with that 40% growth in FDI over the last 5 years. Moving on though, I think we need to look at the picture in slightly more detail. Can I turn this off now? Go back to the... Thanks. Let's just look at what's happening across the world, starting in Europe, which is now facing enormous challenges, as we all know. Greece, Ireland, Spain and Portugal are all going through a difficult time with big debt burdens to manage. And the consensus is that this is only the start of the problems. Other nations are going to face similar issues. The contagion has spread from Greece to Ireland, to Portugal, to Spain, and now we're seeing that questions are being asked about Italy and even Belgium that a few years ago would have been regarded as a beacon of fiscal rectitude. Global investors are now cautious on Europe. They're adopting a wait-and-see approach. They see several years more of potential malaise. The pressure on the euro is increasing. Nerves are beginning to jangle. Even the Germans are getting worried. Chancellor Angela Merkel said recently the euro is in an exceptionally serious position. And another comment coming out of Germany, if this is the sort of club Europe is, then perhaps Germany would be better off out of the club. Those are serious words for Europe. I was at a conference recently talking about prospects for exchange rate movement. The consensus at that conference was that they were expecting the current travails of the Eurozone to result in a depreciation of the euro, perhaps of the order of 20 to 25% over the next few years. No one would say when, but the consensus is the euro as a currency is going to suffer as a result of the travails of the Eurozone. And will the euro survive? I would say 50-50. North America, of course, also has its problems. As it seeks to manage its way out of the recession, today's current account deficit is running at 9% of GDP, which is huge by any standards. The federal debt held by the public is now 62% of GDP, the highest it's ever been in 50 years. And even more worrying, the US came out of the recession, but growth is stuttering, and global investors looking at the US find opportunities hard to find. If there are opportunities, they're going to be diminished by the continued slow growth. The recovery in the US can only be categorized as very anemic. Getting closer to ASEAN, we come to Japan and Korea. Japan is still grinding its way through that generational cycle. Began with a collapse in 1990, moved doggedly into troughs in 2000, and is only slowly stumbling out in the midst of the usual political morass that you see in Japan. Japanese companies have outgrown their home market, and it's unlikely that there's many undiscovered jewels in the Japanese market to provide opportunities for foreign direct investors. In the Korean peninsula, obviously we see tensions escalating, and these cast an element of uncertainty, not only in the short term, but probably into the medium term as well for Korea. So from the point of view of global investors, what's left? What's left is Asia Pacific and South America. South America is not something we're going to talk about today, but we do need to recognise that it is still a viable option for international investors, and opportunities in Asia Pacific will be compared with opportunities in South America. However, there clearly are sufficient investors around the world that both of these regions can prosper if the conditions are right. Coming then closer to home again, Asia Pacific, which we normally look at in terms of 4 geographies: Australasia, India, China, and Southeast Asia. Australia is obviously known for its natural resource industries, and on top of that, it also offers an investment environment with a fair degree of certainty. However, most investors outside the resource sector still see Australia as offering limited growth opportunities. The population is only 23 million people. It's a long way from international markets. It's a big country, spread out, and therefore transport costs are always going to be a large factor for the economy. Sure, there will be opportunities in Australia that provide a decent return, but mainly in the natural resources sphere. And outside that sphere, and outside the export market, it's difficult to see global investors focusing on Australia as the next big prey. New Zealand too is blessed by nature, but again, it's a very small country, and it's a long way from anywhere. That takes us then to India, the country that had the 40% growth in FDI over the last 5 years, outstripping everybody else. Investors focus on India. They're attracted by the billion population and the growing and burgeoning middle class. But until today, few investors have managed to make much money out of their forays into India. They still find the investment climate difficult, especially with the diversity across different states, the complex political environment, and, must be said, continued corruption issues. but its untapped growth, people's boundless ingenuity, its democracy, and its English language culture mean that its promise remains undimmed. India will remain on investors' screens. So, of course, will China. And I do not doubt that China is a success story for many investors, and many investors still hope to make a success in future investments in China. There have been problems and frustrations and challenges, particularly in dealing with Chinese partners. But despite that, and particularly investors who've got control of their investments in China, which is crucial to success in most cases, some investors have realised very good returns. Below the radar screen, regional private equity house in Singapore last month exited an investment in China that netted it approximately $500 million over a 5-year period, and exit at $500 million more than they went in at. That was a success, and investors around the world are still looking for future opportunities like that in the Chinese market. Having said that, though, some worry that it's a bubble. And you don't have to be a skeptic about China to recognise that you can't put all your eggs in one basket. Global investors are going to invest in China, but they're going to want to go somewhere else. And by processes of elimination, that brings us to the ASEAN market, which is what we're focusing on now, opportunities and challenges in ASEAN. There's no shortage of investors looking at ASEAN. Private equity houses, the well-known international players like Carlyle Group, 3i, KKR, TPG, are all here in ASEAN to stay. From a strategic point of view, big companies are still coming here. Sumitomo, RTZ, Vale of Brazil, Schlumberger in the oil and gas industry. Just a sample of the major global names that are currently very actively looking at investment opportunities in ASEAN. And ASEAN countries are looking to attract more investors of that kind that will raise those GDP statistics from mid-table to top of the table. Raise employment, increase incomes, increase living standards, develop infrastructure, and make all the people in ASEAN better off. So that's what they want to do. But despite that, we continue to hear the stories of frustration and disappointment. What are these stories? What are the common complaints about ASEAN? On the most basic level, I think it's something that came out in the previous talk. The problem of corporate governance still haunts the region. Problems with corruption, inability to execute plans, bad investment strategies, poor infrastructure, undue political influence, and blurred distinction between government and private sector. Obviously, in some countries, including here, government is a major investor, and obviously it uses its control of economic assets to help grow the economy. But at the same time, governments in that situation also find themselves underpinning complex structures of patronage and discrimination. Investors don't like that. They recognise it can be necessary under certain circumstances, but it creates uncertainty. Close ties between government and business, which appeared so crucial to economic development during the earlier periods, are now associated with efficiency and in some cases with corruption. And investors simply regard that as a tax on doing business. Reducing the corporate tax burden encourages investment. Reducing corruption also encourages investment. And this is a challenge that still remains for many ASEAN countries. Government intervention is still needed, but we need to get the right balance, encouraging private sector investment, not discouraging it. An additional criticism of ASEAN is the perceived inability to put ideas into practice. Great at planning, not so great at implementation, has been the cry of foreign and domestic investors across ASEAN. Perhaps Singapore can be excluded from that to a large extent. Often, though, governments announce initiatives and plans which excite many investors, but then, more often than not, these plans turn to disappointment, particularly for those who've backed money or bet their money that these plans will go ahead. This inability to implement plans has always haunted ASEAN economies. The trend is not uniform, but again, it's a major issue that has to be addressed if ASEAN is going to move up in the tables. The other point about ASEAN is that it's not a single region. It's a region geographically, but not economically. Economically, it's very, very varied. There's little similarity. There's big political and economic differences and cultural differences between the different nations of ASEAN, and the economies are all at varying stages of development. The underlying reality then is that the ASEAN countries are more competitive with each other than complementary to each other, and they're typically locked in struggles to attract investment, competing towards the bottom. Let's consider a different world. Let's consider a thought experiment where the ASEAN countries move as one, move together in harmony, and only when they absolutely have to, move at the speed of the slowest ship. In this world, foreign investors would perceive ASEAN more or less as a single target market, rather than as a collection of different markets. Rather than a number of small markets, they would look at it as one big market, which would make it obviously much more attractive. This investment proposition would propel ASEAN forward and would make it a real rival to China and India. In your portfolio, China will be a must-have, India is a must-have, and the big ASEAN market would be a must-have. It would be the number 3, it would not just be a small alternative to India and China. There should be no shortage of incentive for the ASEAN governments to go all out to achieve the benefits of collaboration. In 2000, they started this when we had the Chiang Mai initiative, which was designed as a network of bilateral swap agreements among ASEAN plus 3 countries to address short-term liquidity difficulties. That was a relative success. It was obviously caused by the problems in the late 90s, but it did help ASEAN to come through the global financial crisis. The pool of reserves was expanded in 2009, and as an example of successful cooperation, it does form a trailblazer for what could be done in future. The way ASEAN came through the global financial crisis was not luck, it was as a result of those intergovernment initiatives. There are more initiatives underway which are being implemented or about to be implemented that will help bring ASEAN together. The first one is setting up the ASEAN Fund to invest only in ASEAN infrastructure. Clearly this is beneficial. Not only does it help progress the improvement of infrastructure in the various countries, but it also of itself creates a safe vehicle for investment. Across the world, savvy investors are looking at infrastructure as a very safe long-term home for their investment funds. In the short run, therefore, the countries will improve their infrastructure, providing a long-run boost to the economy, but also they're actually laying the grounds for foreign capital investing in these markets. This initiative also helps to address the issue of ASEAN nations not investing enough in each other. This is a wider and more fundamental problem. People invest in themselves or outside ASEAN, there's less investment on an intra-ASEAN basis. ASEAN countries have never been able to come up with a common position on these issues. If ASEAN countries members are not comfortable enough to invest in each other, but focus only on safe havens in Europe and America, then what hope does ASEAN have for attracting foreign investment? Intra-ASEAN investment is growing. For example, just from my own business, a much larger part of Rothschild's M&A business is now intra-ASEAN than it was 5 or 10 years ago. The appetite for intra-ASEAN investment is here, but it's not strong enough. There need to be continuous measures by governments to encourage cross-border investments. Among ASEAN members themselves, there is a sense that neighbours need to liberalise their investment regimes and encourage reciprocation. I see this trend as continuing. There will be improvement, but the test on how successful it will be is going to be when the large private family businesses that currently underpin so much of the success of ASEAN countries will know that intra-ASEAN investment is really working when we see these family businesses not squirreling their money away in Europe and America, but investing it substantially elsewhere in the ASEAN region. There's also been talk about utilisation of foreign reserves that will benefit ASEAN, whether it's investment in the ASEAN Infrastructure Fund or whether it's outside that. Clearly there's a school of thought which says that foreign investment, and I'm talking about the investment here of sovereign wealth funds, should be placed only in very, very safe investments. But there is a question whether all that needs to be put into safe investments or whether it can also be used as an agent of entrepreneurship and going for growth as well as for income. What proportion of that should be utilised and invested in the ASEAN region? If ASEAN countries want to progress to the next level, then they'll have to make that leap of faith. And some of these sovereign wealth funds will have to invest more into the ASEAN region and undertake more nation building rather than reserve building investments. In conclusion then, the ASEAN region faces challenges that are very real and are not small by any measure. But these challenges are surmountable. Government can reform its policies. Corruption can be pegged back. ASEAN investors can focus on investing elsewhere in ASEAN countries. ASEAN governments can coordinate economic policy more, can act as if ASEAN is a region rather than just a group of mutually competing countries. ASEAN today, partly as a result of the policies that I talked about earlier and the coordination that took place after the Chiang Mai initiative, is in a much stronger position, relatively, than is the rest of the world. If ASEAN takes advantage of this situation and does some of the reforms I've talked about, it can move up that league table. But the countries need to get on better together, they need to trade with each other more, and they need to have trade and investment policies designed to foster that improvement in relations. ASEAN needs to work as one, and it needs to work as one relatively soon. If ASEAN can overcome those challenges, the ASEAN countries will rise to the top of the table, they'll leap up the table, and ASEAN citizens can leap in their hearts. Thank you very much.